As I've said earlier, I think value creation for IDFC shareholders will be a function of how each of the subsidiary businesses scale up. The bank has just started. It's only the first quarter of the bank. We've seen pretty good progress. I do believe that the bank will scale up quite well, and you've heard details surrounding the bank last week when the results were announced. We have several other businesses within IDFC. We have an asset management business which is doing exceedingly well, which again I believe has a long way to go to achieving full potential. We have an NBFC which has only just started and is focused on the operating infrastructure asset space, and that, as you know, is a very large landscape. We today have only about 1,000 crores of assets, which we've built up actually quite quickly, and I do feel that this business can again scale up quite nicely. We have an alternatives business which has almost 16,000 crores of assets under management, and we're in the market raising funds in private equity and real estate. So one part of the growth strategy is obviously to scale up existing businesses, bank, alternatives, asset management, institutional equities, and the IDF NBFC. The second part of the plan would be to try and see whether there are any attractive new areas that IDFC could get into. That would obviously be a function of what the return characteristics of those businesses are, capital requirements and the regulatory requirements. So I can't get into any more detail because it is very preliminary. And the third aspect could be trying to figure out whether there are any structural issues that can be sorted out in order to make sure that any kind of leakage from a tax perspective, etc., in the current structure can be minimized. So that again, from a value creation perspective for IDFC shareholders, along these three lines we will try and explore possibilities for shareholder value creation.
What are your capital raising plans for the quarter going forward?
There's no real capital raising in IDFC Limited that's required because, like I said, each of these businesses are pretty well capitalized. Other than the bank and the infra debt NBFC, which are credit businesses, the only other business that requires any kind of capital commitment is our alternatives business, to the extent that we contribute to funds that the alternatives business raises. For the funds that they're currently in process of raising, we have already set aside capital when we did the demerger. So that business already has capital. The IDF NBFC, as I said, is capitalized with almost 500 crores of tier 1, and we have a little over 1,000 crores of assets. So that again has enough room from an equity capital perspective. There will be debt raising that needs to happen, but that's just part of any kind of NBFC or any financing business that raises bonds to finance growth. And the bank is exceedingly well capitalized. As you know, we have capital adequacy of 20% plus, and so the bank will not require any kind of equity capital raising for a few years.
You indicated that you are doing roadshows to raise funds for the alternatives business, that is Fund 4 and the real estate fund. Could you indicate the corpus you are targeting and how much of it you have raised so far?
For the private equity fund, it's about $400 million, and in real estate, there are two types of funds we're trying to raise. One is a domestic fund, which would be the second. We already had a first domestic fund which we've largely deployed. The domestic fund for real estate would be, call it, approximately 750 crores, and the international one is focusing on middle income housing, and that would probably be somewhere in the region of 200 to 250 million. But as I said, the fundraising environment, particularly from international investors, is still not easy, and that is a function of obviously underlying growth picking up, as well as investors getting more comfortable with where the currency settles down before they make commitments.
So we are seeing a lot of structural weakness in China. We are seeing weak global cues. Given the macro situation, how do you read and assess the situation in the country? Which sectors show promise to you at this point?
Actually, if you ask me, the headwinds that face many countries and indeed globally, whether it's commodity prices, etc., are actually a positive for India, as you know, because we're a net importer and certainly of oil, and the decline in oil prices will certainly help India. I think China slowing down is something that people need to get used to. It's a very large economy, can't keep growing at 8-9%. I think it is going through a structural adjustment. It may be The reaction of investors to the situation in China may be more exaggerated than what the reality is on the ground. I certainly expect that China's slowdown will affect all economies, including India, but it may not be as serious as people are making it out to be. So the bottom line is our growth, the India growth story, is less linked to what is going on globally in terms of demand in Europe or Japan or anywhere else, because we have enough of a domestic growth story, whether it's from an investment perspective or from a consumption perspective. The two areas that need to be focused on really are to make sure that rural demand and rural incomes pick up and private investment comes back. So those are two areas that require focus. In the interim, I think the government will need to focus on investment and government spending, which they're doing anyway, because till private investments come back, the government will have to try and bridge that gap in terms of investments and spending. So I do believe that over the medium to long term, growth prospects in India still continue to be quite attractive.
My last question, you have around 4% market share in the mutual fund business, in the AMC business. So how really are you looking to scale up this business? Are you looking to get into some sort of partnerships? And given the regulatory changes, do you see new prospects for growth in this area?
We already have a partner, as you know. Natixis of France has a 25% interest in the asset management business, and the plan surrounding Natixis' involvement was to try and scale up the international component of our asset management business. That is still very much part of the plan, whether it's managed accounts or offshore funds. And we do have a small offshore fund that will soon complete a 3-year track record, after which it can be scaled up and is a top quartile performer. So we do believe that that fund can be scaled up. As far as the domestic business is concerned, we have a very strong performance across our funds. In the bond funds, we're a market leader. In equities, we expect to grow our market share. We will soon announce a head of equities who's already been hired and should be on board this week. So that certainly will also help in scaling up our equities business. And so I think that business is doing exceedingly well from a profitability perspective, fund performance perspective, and an AUM perspective, and it has long ways to go in terms of achieving potential.
Is insurance an upcoming area that you would want to focus on, given that you mentioned you are looking at white spaces? Is this an area that could be on the radar going forward?
I mean, it's not rocket science. In the financial services businesses, there are only so many businesses that you can look at. And when you look at white spaces, clearly that is one area that we're not in, right? Now, is that an area that we will necessarily get into? Will it be attractive from a returns perspective, from a investment perspective? There are various aspects to insurance, as you know. There's life, general, health, etc. So, as part of our evaluation of new areas that we would look at, that would certainly be one area that we would look at.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.